All right, going to go over a trade recap for Friday, April 17th. Just had to modify the trading due to the rules of Bulenox, where they're telling me I have to trade about 12 contracts a day. I think I only did 10 today. Figured that was close enough on this account, and I did 12 on this account. And a couple of things that I'm discovering about the trading, and some things I got to trade if I want to get the payouts. First up, just to recap, we'll look at the account. You can see 55 days. You would see a red dot if there was a losing day. There has not been a losing day, and the highest day was at a $400 day here, and the average trades day is about 70, 75, I guess. And I've been bringing that down lately because based on their rules, they tell me I should, if I want to play it safe, I have to trade 12 contracts a day. There was many days in here I took one trade and shut down, and they didn't like that. They said it was flipping. So they told me to play it safe, trade 12 contracts per day. On the other account, this is what a losing day looks like right there. It was a $90 loss. I don't even remember that. I have to go back and look and see what that was. And 326 on a high day. And how many days is this account going? 16 days. So one losing day out of the 16. But we'll go back to account 16. It wasn't that many trades, all winning trades. I've been going in at 2 contracts per trade. I think I did that for everyone. But sometimes I'll go in with 1 if I'm not confident. You can see the first, I was trading MNQ for the first 2 trades. And we'll go to the charts there. I was at 10, 12. This chart should get it. Yeah, here we go. And you can see what's going on. It's this yellow line is a Ludwig level. And the market was up today. Usually when it pulls back to these levels, it continues to trend long. Now, it did breach it a little bit, but you could see these levels are relevant. It was 2 levels here, 2 Ludwigs. There was a green line here. You might not be able to see it, and a yellow here. Once I see price struggling to get through it and it keeps rejecting, I decided to go long from level to level, figuring it was going to be rangy like NQ gets a lot, and getting in 47 right above there and profiting there. I did get the runner here because the ATM has a 96 target and a follow. It follows maybe, I don't know, 5 points behind or so, 20 ticks behind, and it follows price up until it stopped it out. So right out of the gate, it was a great trade. If I come out of the gate and have a good trade, I'm okay with shutting down for the day, but that's the reason why they didn't give me a payout, because there was 11 days that I took 1 or 2 trades, got my profits shut down, and they considered it flipping. So they're forcing me to trade more than I want to get the payout. So first 2 trades out of the gate. The next one, same exact trade. I took both targets out at the level, and let's see how that worked out. So here you go. Price breaks it. It pulls back again right to the Ludwig level. The lower level is where I got in, and I got both out. And it really got a little extra in there. Usually I would get out right at the level, but I got a little bit more. I guess I went and this blue line is the support and resistance radar. I put the targets right in front of there. So again, purposely moving targets to these levels. And you can see, I mean, look at the escape. It went to 57. I got a 55, and look at that reject. So I didn't give anything back there. So it shows the power of the levels and levels trading. That was it for MNQ, which I always traded. This account, all those days of trading, was always MNQ. Since they forced me to overtrade, I have to figure out a way to reduce my risk, right? And that was simply try the same strategy on MYM. Instead of each point being $2, it's 50 cents. That's how the MNQ works. It's a 50 cent for each point instead of $2. And on the big chart, it's $5 and $20. So it does bring your risk down. Even if I'm going in with 2 trades, it's only 50 cents per point. So that was my idea of how I can scale back and not over leverage or over trade, and especially when I'm in profit for the day. I was up $61 on 2 trades, which is, I would have probably shut down. But since they are pulling this requirements that they want me to trade more, I'm trying to just go with their rules and fit in. So let's look at these trades. Pretty similar thing. Now, these were definitely riskier. That I'm looking at, I was really lucky to get out of these. And my idea was, I'm going to pull up another chart real quick to see where it was, is to, it was a high of the day and to go short at a level. Now, there was, whatever this level was here, let me see if I could double click on it. It was just his key level, a live wire key level. So that was my short. And really, I'm not going for a lot here. I mean, I got 15 points. 15 and 12, 16 points. So let's see what that trade looked like, dollars and cents. Now, it's not big because it's only 50 cents per tick, or per point, I should say. So let's click here, and that trade got me $7 and $8 on each one because it's 50 cents per tick. But it was a decent move. 14 points here and 16 points there. It's a 30-point move in MYM. And again, the profits are not as big because I was looking to scale back, being I'm forced to trade a certain amount of contracts according to Bulenox rules. So it's very odd. It's not fair, but they make the rules, and I got to try to fit in. So I wasn't quite done yet. I had to trade a few more contracts. Same exact trade, looking for a level to short highs of the day. And this was a crazy rocket up. And again, I got lucky again. So that was trade 1. Where's the next one? Okay, here you go. Same thing. Another level here. Let's see if we could click on that level. This is just called a golden level. Okay, so they just consider the whole number to be a level, which it is. Price normally reacts at 600, 700, 800. In this case, it was 700. And I'm going right down to the level. So really crazy, perfect trade. You can see a little tail on this one. So it did reject. And I got out, again, couldn't have got out more perfect. I got out at 86. It went to 81 max. So if I didn't get out here, look at what I would have had to deal with. And then listen, I could have added in, right? And, my starting price is here. If I add in at this level, and this level, maybe 1 or 2 contracts, my break even comes up to like here. So, and you can see how relevant this level was. It came right back to it. So the strategy, if I would have got stuck and wouldn't have got, if it didn't hit me out, I would have added here, got out there. So these would have broke even. These would have been the profit. Good trade. Good 30 points there. Per contract, really. So it would have been 60 points, maybe even, who knows. But that's how that's the strategy. I think there's one more trade. Same concept again. But I was really fighting the trend. I was shorting a crazy uptrend. And you can see again, 7 points there, or 8 points, and 13 here. And that was the last trade. I think I waited a few minutes, yeah. There was a 10-minute break between trades. I was just waiting to see what was going to happen. Once I see the market stall at those upper levels, quick scalp, make a couple bucks, shut down for the day. So, and there you go, right there. Again, it high of the day, reject. It was coming back up again. It hit. This is at 27. Okay, so it looks like I got in right below, thinking what was going to happen. This is a normal move. Comes down, hits the levels, tested it, broke through again. This level gets hit. What's the normal reaction? It's going to struggle. It's going to hit this and then continue lower. Well, luckily, I got out where I did. Again, it went to 15. I got out at 23 and 18. So my escape's incredible because, again, if I didn't, I'm back. Well, what's the strategy again if I didn't get out? Well, add in here. And look at that, too. What level is that? That is another key level at 77, and that would have got me out. So, especially with this price action, this was very odd that this was just rocketing up like that. So I got lucky that I was able to get out of those trades, and that was a strategy. One thing I'm going to bring up, and it's just definitely a major problem that I'm going to have. There was some losses here. These was all right. So I traded 16 first. I traded 17 later, and this was all. It's funny. I started with MYM and I ended with MNQ. So that's going to be account 17 at 10:54. So I took a little break. Watch price action for a little bit, or did something else. Came back in, right around here. So this was a little rough. Being I was struggling with those shorts and barely winning them, it's like, you know what? This market's so strong, I need to go long, at the levels. So even if it was high of the day, I was expecting to hit the level and reverse. Well, it didn't happen. Well, again, look at this. What do? You add in at that level. I didn't get out there because my entry was up here. I was trying to get some more. Add in again. And then look, it hits the level when I add it in. It did split it a little bit, but hits it and just rockets up and gets me all out. So what did that look like mathematically? So out of the gate, there's 5 contracts. And you can see, so this one made the money here. All these, losses and then the wins. And the account was up $70. So all of that was a way to manage a trade. The drawdown, here's where my issue is going to come in. And I got to figure out what to do about it because it hasn't happened, but it's going to happen. And then I'm going to have a problem. And what's going to happen is, let's see here. These indicators here is what I use to manage trades. But I guess it's part of the reason why they denied my payout. Part of my strategy is to not lose more than $200 per trade. And I have an indicator here that I made that will either close a trade at a profit. Right now it's set at 75. If I hit 75,000 profit, it shuts the trade automatically. Just in case there's a quick spike up, I can get out of the trade with a profit because sometimes MNQ will spike up real quick and come back down before you can get out of it. This will close the trade at 75. It's not perfect. It might give you a little bit more. It might give you a little bit less because of slippage and when market moves crazy like that. So not perfect, but it will. Most of the times it works pretty well, close enough anyway. And then there's the 200, which means if I get into this trade and it keeps going against me because there was bad news or something and I'm stuck, it will close the trade with a $200 loss. You can see with 50 cents a tick, this was not that much. Especially I was adding in down here. So these contracts had no heat at all, really. Maybe $10 of heat each. So it was, I don't even think it was $100, maybe it was 50 or $60. So I had a lot of room in the closure of the trade. And then once it roared back, and again, a great escape by me. Got it above the 800s, purposely in front of this level. And you can say what you want about the levels. Even their support and resistance radar are weaker levels. Price does cut through them a lot, but look how it held up here. And usually it will hit the bottom or the middle and reverse. And I know that, so I go in front of it just in case it stops short. Like, look in this case. If I was long here and my target was here, I wouldn't have hit it. But if I was a few points in front of it, and this is why I do it. I've seen this happen a lot. So purposely, probably, 07. Purposely getting out right there. Or even a little above it. So that is the strategy. And I'm getting out almost to the tick. If you look at the trades. 05. 07 was where it reversed. So purposely, there is a method to the madness there. I went to 07, I got 05. So that was a little scary, that trade, because I did have to take some heat and manage it to get out of it. And then I don't think I took any heat after that. This was a 3 contract trade. It looks like actually it was 2 contract trade. Then I took 1 contract. So let's look at this one at 1109, which is right here. And again, it looks like I went short. Yeah, I did, and then I went long. So let's get a look at that. Interesting. But it looks like it was hit this level, a bounce. Again, I was expecting this to hold, and it tweaked up a little bit, but it rejected. As soon as it rejected, I'm in and out. Again, purposely above these levels right here, this level right here. I guess this is part of LiveWire. Got it right there. So, and then right away into the long. Got a few points right there. And that concept is because it didn't stop at the level, it normally will break it real quick, go back and test it and continue it down. So that was a concept. So let me grab the 5 points or whatever I could get. So being I got in a 66, I got out again in front of the level, quick scalp. I don't know how many seconds I was in there, but it probably wasn't a lot. The long right here. I mean, that trade lasted a minute. It was 1 contract. That is crazy. For $2.50. It doesn't look like it, but that trade right here looks like it was 2 seconds. That fluctuated in this area for a minute. So if I'm in a trade that long and it's not hitting my target, I know I got to get out of it. So I don't know how Bulenox would evaluate that, where they say, well, you only got 2.5 points. You purposely only just that's a flip trade because you only got $2.50. But I'm in that trade for a minute. It was not a flip trade. I was looking to get more than $2.50. I couldn't. So the market probably went against me a bit and then came back to my entry, backed off, came back to my entry, backed off, came back to my entry, backed off. Now I got to get out of this trade. So that's probably what was going on right here. It was probably just flipping around. And I knew I had to get out, and thankfully I did get out. Or it could have shot up, came back, and flipped around. So whatever it was, it took a minute, which was probably it felt like an eternity. So at that point, I think it was at 10 contracts right there. I must have saw a good setup on MNQ and took that one contract. I think I went at 1 contract and then added that one. So I got another $10. And that would have been at 11:14. And I was probably on this chart. So there you go. Looks like I was shorting. And I said I was going to show you another chart. I'll show you what else I'm really looking at too. And I use it for direction really more than anything else. It's simple market metrics. Let's go back to 11:14 right here. Yeah, nothing. Well, once this broke here, and this is at 11:11. Once you get a close under this is a 21 EMA. It's a 55 EMA. You normally will touch this level. So that was the idea. At 11:14, I got 1, 2, 3, 4 closes. It's 4 minutes. It's underneath the 21. And it did reverse a bit. So I must have got in and added in and then got out. So let's see what that looked like on the chart. Entry at 22. Got it at 18, but something lost. Let's take a look at that. Oh, there was a short. So this was its own trade, one contract trade. 22 to 18. That was the first one we were looking at here. 22 to 18. And what did that look like on this chart? Yeah, so I was getting in here, expecting it to go here. It must have been stalling, and I just got out at the 18. I took that. It never did hit that level, so it was a good escape. It probably flipped on me there. Yeah, and again, it's above this level. That level was at 15. I'm 3 points above it. That makes sense. And look what happened. It hits, goes back. I didn't have to take that heat because I got out of the trade. Now, what's the move? This level, entry at right on the level 25, out where? Right above the level. So you can see these levels work. And this is why I'm not in these trades long. I'm micro scalping. I don't know what you would call it. They're micro contracts. And I'm taking small profits and getting out perfectly. I don't know what that was. I closed something. Did I take a loss on that one? It was 2 contracts that I was long on. Got in at 16. Oh, wait a minute. I was long, maybe. Go back to that. Oh, I see. I expected it to go up. So I went long here, 1 contract. And it didn't go up. I was expecting that level to break and go back to here. Well, what's the strategy? 1 in here, 1 in here, get out at the entry. There you go. That's the trade. You know, and they could accuse me of flipping. But look how perfect that was. Long, 25. Next level was 16. In, back at the entry, out. And that's how you do it. You know, it was started the account at 37, wound it up at 47. Positive trade. 20 ticks. So that's the recap of the exact trades. The fact that this company accused me of flipping is alarming. Now, the bigger problem now, this strategy, like I said, calls for trading and adding in at levels. My safety net, so I don't blow accounts, is it closes a trade if I happen to get down by $200, which doesn't happen much. And I'm curious, we're going to go out to the day I lost to see what happened. Here's what my fear is. Let's go back. Go to April 1st, I guess. If I take a loss, my strategy calls for me to keep trading to get the drawdown back and get green, even if it's $10. Let's go to analysis. I don't know what that is. Let me go back in. All right, so we're going to cancel out, isolate that, and I'll go back for the month and see what happened. Yeah, something ain't right. Yeah, these numbers are not right. Yeah, obviously that's wrong. Yeah, Ninja. The numbers on this account are here. So Ninja's not getting the data right. We got to find this $90 loss on April 7th. So let's go back to April 7th. Hopefully it's not quirky. All right, so it looks like let me just go back even a day early and see if it's still good. I don't think I traded that day. The 3rd? Maybe I didn't trade those days either. Let's see. Oh, I didn't trade. When was the last? Did $40 on April 2nd. So I can't trade every day. Yeah, something's quirky there. All right, so we have to deal with it. But at least that loss is in there. And I took 24 trades. Let's isolate that day, actually. I'm going to go to the 7th and the 7th. And listen, I traded 24 contracts, which is not crazy. But, yeah, see, so whatever this trade was, it probably closed at the same time. That was my $200 loss. Right. Let's see. I'm out. Now, it looks like I won that trade. So that was trade one. That was good. Here's where it could have went off the rails. I think I was having data problems. Because this is 30 seconds and I lost $113. And this one lost $100. So there's a $200 loss here in 30 seconds. So I don't know what happened. It might have been like news-driven issues. That was definitely a data malfunction. But my protection was this. It probably went down with the data malfunction, but it did close the trade. So the software did protect the account, even though there had to be some sort of data malfunction. I'm not on the 7th anymore. How about we close this one? There we go. All right, so, and ultimately it was a losing day, but it was down 216. Now I come back. I have to trade to get the drawdown back. And I'm nickel and diamond here. Get it down, first trade, 29, but then I go down again. Nickel and diamond back, boom, boom, boom. Almost knocked $100 off at that point, but then drop back down to 150. Get it back. Close to 100, and I mean, this was a struggle. And now I go on a winning streak. 1, 2, 3, 4, 5, 6 wins in a row. So from 200 down to there, and that was probably enough. It was a struggle. And look, I even came back at nighttime. So, and really, this was only from 11, 12. So it was 30 minutes of trading here, and I kind of was giving up. Looks like nighttime, I must have saw a couple of good trades and knocked it down a little further. Interesting. But let's go to the trade report and what my fear is. And I don't know how they would view this. If I'm taking 10 to 12 contracts per day, I had 24 here. So I don't know. I mean, that was pretty amazing how I've came back from the $200 loss and got it down to 72. And then, obviously I got it all back here, where the account's green again. But it was down 200 at one point. That particular day, it came up as a $90 loss, according to Bulenox. So I guess if I do take a loss, I have to be careful. I don't think 24 contracts would blow it out of the water. I'm surprised that I was able to get that much money back with that little amount of contracts. So I don't know what that magic number is. If I take a $200 loss, how many contracts can I trade for the day before they flag it as, I don't know what they would do. It would bring up my average of all of these days. So something I maybe got to talk to them about and ask them, hey, this is my strategy. How am I going to get penalized for this? So, complicated stuff, but we'll figure it out.